Right, we're going live. Alrighty, traders, good afternoon and welcome to the AAA session here once again here on a Monday afternoon as we go ahead and talk about the markets with my guests Chris and Tyson. We're going to go ahead and focusing on two currency pairs that we're really going to be talking a little bit more details in. Chris has got his two, so in fact it's going to be 6 overall. Tyson's got his two, I've got my two. We're going to be talking about movements and currency pairs that are going to go ahead and provide us the best opportunity for this week, or at least what we believe to be. So let's go ahead and dig into the details right after this. Well, traders, welcome back and welcome to another great session here with the AAA session. Today, we're going to be talking about currency pairs that are moving the market this week and how we're going to be able to trade it. I've chosen two of my own. Chris has got his and Tyson, and we're going to dig into the details right here. So let me introduce to you the panel for today, Chris and Tyson. Chris, good morning. Good afternoon. How are you doing, my friend, today?
I'm doing great, Gary. Happy Monday to you and everybody out there. Nice to be with all of you on the 24th of August. We're live.
We're live. Absolutely, absolutely. Tyson, how you doing, buddy?
I'm doing good, Can't complain. Hot in Minnesota, so whenever it's hot in Minnesota, I got to be in a good mood because we know what's around the corner in a few months. So things are going well in this August day.
Well, good to know that, man. And now let's see, guys. I believe we've had conversation and around about looking at some currency pairs for today. So I want to go ahead and pass it on very quickly because we've got about 30 minutes to go ahead and drill this out. So I'm going to go ahead and throw this out, and you can grab one at a time if you want to. But Tyson, if you want to go ahead and kick us off with your currency pair and some information that you want to share with the students in today's session.
Yeah, so the two main currency pairs that I'm focusing on is I do something called a money flow filter in my trading room, the money flow trading room every week. And one of the specific patterns that we're noticing coming into this week is we had pretty massive CAD strength last week. And so I'm looking for that move to end, essentially. So two kind of things. Number one, the CAD got extremely overextended last week. At the same time, the dollar is starting to show signs of strength. So I believe that strength is real, and I believe the move in the CAD has gone too far. So saying all that, I'm going to look at the dollar CAD long position. I think it's an amazing position. I think it fits well within what I'm expecting with economic data, with oil, and with the dollar forming at least a shorter term, medium term bottoming formation and then rallying up. So dollar CAD is going to be one of mine. And then the second one is going to play off of that same type of dollar theme. And it's going to be in the most likely in the euro dollar. I'm going to go dollar CAD and euro dollar are going to be my two focuses. And it's going to be essentially focused on buying the dollar and selling the CADs and selling the euros.
I like that because I mean, with the hurricane that's coming through the Gulf at the moment right now, we've got a double whammy, I like to call it. Two hurricanes coming through at the same time. They're looking to shut down the oil supply down. I think they've cut it down to 58%, and gas. I think natural gas down to about 44%. So they're cutting down, obviously because of the concerns of what's going on right now with the two hurricanes. That's going to create a little bit of a more bearish move on US oil, right? So if we look at US oil chart, would you agree, Tyson? Is this going to be part of your sort of analysis, looking at US oil and expecting US oil to fall, and because of that resistance there at $43 a barrel, not breaking above that, staying below that, we're expecting some downside move?
That's exactly it. And it plays into, I had a webinar at 11 a.m. with the client webinar, and I said, right now it's interesting. We're in an interesting period where the fundamentals aren't necessarily, they matter, but I don't know if they're going to matter all that much until after November 3rd, after the election, because people don't really know how to position is this bullish? Is this bearish? What are the tax rates going to be? All this kind of stuff. So they matter, but I think they're gonna have a lagging matter. And so I look at this, and I say all that to kind of say this: oil is fundamentally driven, and it's also driven very much on true supply and demand of the supply within the market. And so I think it's fairly priced with where we're at economically. But I would say this: it's fair to slightly overvalued. It is for sure not undervalued right now. And if we grow our way out of this, if things get good, then we could see $50, $60 a barrel again. I just don't necessarily think. I think we've gone a little too far, a little too high.
Sure.
And I think we're going to come back down to that range. So I think the chart you just had up, Gary, is pretty much identical to the pattern that I'm looking at also. I see a nice, I don't know if we're going to go that deep, but I do see a nice sell-off into that to retrace some of that big move that we've had since March. And then from that point, basically from these highs down to the low in March is going to be the key area. We're either going to break above that and break aggressive in 2021, or we're going to potentially go and retest those bottoms. I'm not going to say, I don't think we're going to obviously retest the zero bottom, but as 2020 has taught us, anything is possible, right? So yes, I think we're going to get a decent size retracement back into the lower ranges, and then from there we could springboard higher. But I don't really care about the springboard higher right now. What I care about is taking advantage of the retracement.
Yeah, and I must agree on
which should go back into selling the CAD or buying the dollar.
Right, and I must agree with the dollar index right here. I'm expecting a breakout to the upside on the dollar index, and so looking for that rally to the upside in dollar. Yes, I think your euro. You said your euro dollar. You're looking for a sell-off on euro dollar, correct? Right?
Yep. And let me give you the exact details on my dollar CAD first, and then we can kind of discuss this. And I'd like to get Chris' opinion on this too. It's a simple trade. I do think that we have a.
Did you say dollar CAD?
Yeah, dollar CAD.
Okay, all right. Let me move to that chart so people can see it visually.
Yep.
Okay.
So what I'm expecting here is we have that gap that was created back in late February, and that's a key area that I think the market's going to come back and retest multiple times over the course of the next 10 years, to be honest. And that's an interesting area back to about 35.15. So this trade's going to have two targets. That's going to be my secondary target, that 35.15 level. But here's how I'm going to get into this. So today, I love today's bar. Today's daily bar is really starting to show some signs of bottoming formation. We put in a pretty aggressive lower low, followed by a pretty massive reversal over the last few hours, and now it's rallying aggressively, and I love that. So if we can close above Friday's high, so here's my entry point. I would look to buy on a close above 32.33, which is Friday's high. If we close above that, I want to buy. I want to place my stop at 31.30 because that's the low. That's the recent low that was put in, I think, last Wednesday. So I want to put my stop at 31.30. So I'll have about 103 pip stop, so about 100 pip stop. My first target on the upside is going to be up to a supply level. It's like a 1 hour, 30-minute supply level at around 33.80. So I'm looking for my first trade. I'm looking for price to move about 140 pips up, and I'm risking about 100 pips. So it's not great risk versus reward, but I really like the setup. My second target is going to be 35.15. So overall, if I get to both targets, I'm looking to make about 220 pips or so, 215 pips, and I'm risking about 100 pips. So it's a little over 2-to-1, and I love the technical setup right here, especially if we can get a close above Friday's high.
I love it, man. I love it because if I look at that chart alone, I've been talking about that for a couple of weeks now and said, hey, traders, I'm still a buyer on US dollar CAD. And the fact for that is the details with regards to the technical analysis, right? We're at that support level. We're expecting price to go ahead and bounce on the support and go back up again. So I like that setup. If you look over here at the chart, this is the daily time frame, but yet we're at that channel line support. And look at the oscillator. We're seeing great divergence here, bullish divergence here, indicating that price is going to move to the upside. We've just checked out the dollar index chart as well. Dollar index chart says, yes, we got to go bullish as well. So looking for a US dollar CAD upside rally and a euro US dollar downside move. man, I think you got two great currency pairs that are going to make some tips for you this week. So
What I love
I like
about
that
this
call, Tyson.
is if you go back to that chart, Gary, we didn't
Yeah.
even discuss this beforehand. We have this your second your first target there, your first purple line, your second purple line are almost perfectly lined up with where my targets are going to be, and we're thinking about almost the same exact trade. So again, my first target would be right about where you had that September high. My second target would be right around where you have that June high, and again, I would be strategic and I would look to buy if we can close above Friday's high. I think that's a really crisp signal of a reversal in the dollar CAD. I like that entry.
All right, fantastic. Well, if any of you are watching right now and paying attention to those currency pairs that Tyson is, go ahead and post inside the chat right now. Just go post some comments, and Tyson will go ahead and address those comments as we go through the session today. So go ahead and address those comments as I move to Chris's two pairs that he's focusing in on right now. We can go ahead and address those questions as we go along the way. So, Chris, what is the two pairs that you're focusing on?
Hey.
Hey! Let's bring Chris into the conversation.
Well, it's a broken record for us because we talked about this pair a lot, but I think Aussie dollar has a fantastic setup. I know Tyson says something about the euro dollar, so I'm going to take the opposite of that, of the dollar Swiss. I'm short Aussie dollar. I'm long dollar Swiss. I have an amazing setup between the euro dollar short, dollar Swiss long. You know, kind of pick your poison. They're going to be somewhat inversely correlated. So if euro dollar does drop, dollar Swiss should rally. Dollar index. I mean, we're looking for dollar strength to make at least a jump here, get some confirmation. I really like that trade on dollar CAD. I was kind of hoping the dollar CAD would settle in around 1.30. That's kind of where I wanted to start, like looking to test and buy and get in a little bit early. I think Tyson just outlined a really clean trade. I've got a nice clean trend line. We talked about my trading room, so I agree with the dollar CAD a ton. 130 is still kind of my major support level that I kind of work the overall area with some confirmation. But if we go to Aussie dollar, I'm looking for Aussie dollar to just work its way back down to 68.75. Now that we've talked about all sorts of levels in these sessions. There's one major spot right around 68.25, 67.75. Here's the deal. I see a rising wedge in Aussie dollar. We don't quite have the lows being broken yet. So I mean, Gary can show the chart. That rising wedge is perfect. Have we broken out of the rising wedge? It's going sideways. It's drifting, but we just need to see if the bears will push it down low enough to take out some of those recent lows from early August, mid-August. And if that's the case, we should be in the clear for that Aussie dollar to kind of carve out that high, work its way down towards 6,800, work its way back down to 6,700, and there's a ton of profit up for grabs there. So I really like that trade. And the timing, the reason I'm talking about this, the timing of the Aussie dollar is in my Right Trader Max course. I also use bar counts. And so when we have these great trends and these great abilities to follow the trend, that's awesome. We trade the trend as long as we possibly can. However, there's also a historical significance to how long these trends go and when they tend to stop. So we've been waiting for a top to form here for the last almost 2 months. And we're currently sitting on a 4-hour chart, Gary, 533 bars, which I have not seen before. The average bar count is 116. We're at 533. That's crazy overextended. Okay. The average pip distance away is 670. That's the max. We're actually currently at 718. So we have like some of the biggest extremes we've seen in a long time. And again, I'm just trying to sell the highs, trade really small, get that rising wedge confirmation, and then step on the gas and get a little bit more aggressive. As once the bears, I think, kick this thing over and kick it into gear, we're going towards 6,800. So I'm essentially in. My break even is around 71.50, which is currently, upside down 20 pips. So 71.50 is a break even, with essentially my drawdown is to the current highs around 72.50. Not a big deal, but I'm going after 6,800, 6,700. So for me, the reward here is quite large compared to what I've been risking just sitting in this trade. So I really like the setup. It's about time. Like, I think that one thing that traders going to be mindful of this week is August can be like, I mean, if you look at what price has done, if Gary zooms in on like a 4-hour chart or a 1-hour chart, you're going to see price go up, straight down, go up, straight down, and it's done that on the euro dollar, the pound dollar, the Aussie dollar, the dollar CAD. We're just getting like this boredom, like volatility right now, where the market doesn't want to, quite make the top. It doesn't want to quite make the low, but it's starting to make those really important impressions in those transitions. So I think that directionally we're going to see like an official top forming here sooner than later. Look for that bearish confirmation outside of that rising wedge, and that Aussie dollar should be poised for a couple hundred pips to the downside. So I really love that.
And we got a great monthly missed target down here around about 66 and change that we could be chasing after as well. In fact, we got 2 missed targets, one a little bit further down south there as well on the monthlies.
Yep. So that monthly target comes into play. I know Tyson's looking at some supply and demand levels down there. I've got pockets. We've got targets. We've got tons of divergence. We've got a right trader bar count. Look, and here's what I tell traders. Like, I've been talking about this trade. Tyson's been talking about this trade for weeks. But the reality is, let's say that we didn't have a bias. Let's say that for the first time we just now look at this chart. All 3 of us would probably agree that if we just look at this chart for the first time, we'd want to sell it.
Yeah.
Right? So even though we've been biased, it's like, look, we're not being irrational here. This is a good setup. This is as good as it gets technically. So it's just, I'm in a little bit early. I need a little bit more confirmation. When I get it, I'll add to my winning position, and hopefully it's just a nice big chunk of profit for everybody.
Chris, what you just said is so key, because I think so many traders need to do that, and there's a lot of traders who don't. It doesn't, like, we got to stop and think, yes, we're in the position we're in now. Maybe we got in early, but we got to kind of separate that. What would we do right now? If we had to make a decision right here, right now, what would we do? And the reality is you're 100% right. Yeah, I'm drawing down. Yeah, I'm in a position. But guess what? Doesn't really matter. If I didn't have any of that, what would I do? I'd sell.
Right.
So if I would sell right now, then I better be either in a sell or adding to my sell. And if I'm already short, I'm already in a max size position, then I better be willing to hold.
Right.
And so that's very, very important. You almost have to, yes, we can't ignore the position we're in, but we got to separate that in comparison to what we're doing now and say, okay, what would be the new position if I got in? Well, it'd be a sell for me easily. I think what I'm hearing is dollar strength.
Yeah.
That's what I'm hearing.
I mean, just what we've talked about, Aussie dollar, dollar CAD, dollar Swiss, euro dollar, pound dollar, all those look really good. The only one that I would say would be the oddball of the dollar basket would be the dollar yen. And I actually, just in my weekly outlook that's going to get posted here shortly, I think dollar yen is going to be a big, fundamentally driven, sentiment driven, election driven currency pair. I think the yen basket's going to be election driven. I'd actually, if we want to bring that up today, I mean, I didn't plan on that being like a great trade, but I'd like to get this segment and kind of talk about the dollar yen and see, am I taking crazy pills? Am I sniffing glue here? Or am I seeing something? So Gary, do you want to bring up that dollar yen? Can we take a look at that one?
Absolutely, sir. Okay. Here we go. So dollar yen, let's pull that one up right here. I'm going to pull up the daily. And I think if you are sniffing glue, I think you may want to stop that. No, I'm just kidding. All right, I call this a currency from hell. And the reason why, I mean, look at this. I mean, it's just like compressing itself inside a range. I mean, it's just not breaking out. It's not doing anything. Obviously, because we've got dollar and you've got yen, right? Both of them being safe haven currency pairs. It's just fighting against these fundamentals that we're getting out in the news. So, but yeah, this is it right here. Man, this is there's not a lot for me to chat about this other than the fact that you're right, Chris. I think it's definitely going to be driven by the elections coming up over here in November.
Okay, so let me throw out a hypothetical, and let's keep the chart up here so everyone can see it, and I'll kind of outline this. So I think after the crazy shakeout we had from March and April, where we had that giant move down, bottoms, giant move up, I feel like what's happening now is all kind of a corrective move. So my outlook is that we might see this choppy, crappy channel all the way down to, there's support at 105, which we know the market's flirting with. It might come all the way back down to the lows again, Gary, at 102.20, 101.50. Yep. But I think that the bigger fundamentally driven movement would be we test the 101.50, we test the 100 level, and we have that all important protected 100.00 level that like all the buyers are sitting at. Now, whether or not that's like the reactive number, I just think that there's going to be one more push to like 112, one more push maybe to 114. and then reality. I think that we could come back to where you have the number 2 on your chart. We come back to number 2, meaning we've got a bullish move up to the 4 high, the 2 high, and then we start looking for a bigger sell-off later on. I guess part of me thinks about, Tyson, was it last week or the week before? Maybe it was in one of your webinars. You had this awesome outlook of like, I don't know if it was Aussie yen or it was something about like the stock market outlook, but you had like this amazing cycle of like, here's what's going to happen based on election. Here's the, the Santa Claus rally, the vaccine promise, and then here's reality. Like the way you kind of had this 2 or 3 phase projection for the next, maybe 6 to 12 months. I feel like the yen is going to be very much impacted by that. So
yeah, it was in the Aussie yen, and basically it was essentially set up, and I put it on my Facebook page. Big shout out, Facebook.com/Ty the Trader. Go and like me on my Facebook page if you can. That'd be great. But ultimately, it has more of it has a little bit of like, hey, we could rise up a little bit.
Yeah.
But more of a bearish bias. And Chris, I look at this and I think you're spot on. I look at right now, I don't like the short level right here. No. However, here's what I'll say that I am fully confident of. I think we could go back up to about 208. I want to sell at, or I'm sorry, 208, 108, 108. I want to sell for sure at 108. I want to sell at 109, and I want to sell at around 110.75 if we get up there. Because here's what I see on the charts. I see price, and I can't put a probability on this, but I would have to say I'm about almost 100% confident we're going to see 102.50 before we see 112.50. And so if that's the case, I need to cut that in half, and I need to say anything above the halfway range of that in that area between, let's say 107 and 112.50, that's my sell zone.
Right.
I'm not confident enough to start buying. And if I buy, I'm going to buy on short-term basis. I'm going to use a short-term right trader max. Yeah. I'm going to use short-term strategies just to get those quick pops, but I'll look to take longer-term swing trades on the short side. And my levels, again, the lowest level I would sell at would be right around 106, probably 106.50. But I think we're going to get back up to 108, and then I'd sell at 109, 110.75, put my stop at about 112.50, and I'd look at 102.50 as a target. And I think that's very realistic on where we're going. And in fact, what's crazy about this is as the markets rallied up, and this is one thing that we want to pay attention to, as the equity markets has rallied up, the dollar yen has not participated in that rally, which means any weakness that we see in the equities market could have the dollar yen fall aggressively and very, very fast. So we need to watch out because typically there's a really high correlation in that. That correlation has not been the case over the last month and a half, 2 months. And if we start to see weakness coming into the markets, dollar yen's going to sell off aggressively, and it's going to happen fast. So I love the trade, Chris.
Yeah.
Well, my opinion about this, Chris, is this, man, if I'm not seeing anything happen, if I don't see any defined pattern giving me sort of directional bias as to what I need to do, if I don't see something that stands out to me and says, hey, listen, trade it. I mean, it's if you looked at the US dollar CAD setup, right? US dollar CAD, it was a no-brainer. We've got bullish divergence. We've got at the bottom of a channel line. There's trending happening in the market. We're seeing great patterns with regards to the US dollar CAD. This pair right here, this is why I call it the currency from hell, because if I'm not seeing anything right now, I'm seeing a wedge. Wedge just means stay out, right? It means it's consolidated, it's range bound, it's not doing anything. We need to stay out of the market. When I see this, I'm simply just going to stand out. There's so many other currency pairs that are sitting out
for sure.
and sitting up with such great setup. It just doesn't make sense for us to spend even 30 minutes on this chart to try and figure out what it wants to do. Just move on, find another currency pair.
Here's my 30 seconds. Earmark this one for the election. And the yens are going to be like the one basket that you want to watch around the election. You're going to get some good volatility. You can get some scalping opportunities. You can have some big swings. Look, I mean, look no further than 2016, right? We had a major catalyst this year with COVID and the market crashed, the market recovery. Sure. So you see this massive swing for what, 1,600 pips, 800 down, 800 up, or 1,000 plus pips both ways. 2016 with Trump getting elected, we went from 108 to 118. It's like, it's a pair that'll move. So if we just set this one aside for right now, I'm interested in seeing the dollar yen kind of acts as the gauge and the compass for all the other ones. So if we see dollar yen one direction, then I think the yen basket is going to follow along with that as well. So that's one thing I'm watching certainly around the election.
I'm on the same page with that regard. Putting an opinion in it and coming back to that during the election period. Absolutely. I would say then let's go ahead and take a look and see if we can see some breakouts, see some sort of some confirmed directional bias, and then go ahead and start paying attention to that. But other than that, I'm on the sideline on this pair totally.
Can I say one thing that I would do? I agree.
Just one thing, Tyson. Just one thing.
If we break below last week's lows, we're going to 102.50.
Yeah.
Faster than you think.
Hey, and you know what? When it happens, let's react onto it when it happens.
Yeah, that's what I'm saying. But look at last week's lows. So just traders out there, if we look at that 105.15 level or 105.10 level, we break below that, have a bearish bias all the way down to 102.50.
We got Leroy already saying he's skipping work that day and is going to be doing some trading that day. So pay attention what Tyson, what Chris is talking about on that day. Maybe we go ahead and create a special session during that period that we can actually talk about what's going on in the market and how to take advantage of these type of movements that are going to take place, especially US dollar JPY. As Chris has got his eyes peeled onto that chart to make sure that he can go pick up the breakouts that take place. So. Absolutely. All right. Now, Chris, you spoke about the two pairs. I forget now the two pairs that you mentioned the US dollar Swiss franc as well. Did you?
I did. Yeah. Yep.
Okay.
So Aussie dollar that we did, rising wedge, looking for it to fall. Dollar Swiss is, and again, we kind of tag team this because dollar Swiss is the inverse correlation of euro dollar. So okay. I know that you've had this range drawn for a while, Gary, and there's two levels I'm watching right now in dollar Swiss. One is current. But dollar Swiss at the lows around 9,000. Love those current lows. We're sitting just above 9,100 right now. We had lows last week around 90.20. So 9,000 is kind of a nice round number. Maybe that's the equivalent to the euro dollar's 120, which we haven't seen yet. We've come close to it. The next level, and here's the deal. I'm still a buyer dollar Swiss regardless. I'm not going to sell dollar Swiss. So I've already made up my mind, and I know the Swiss offers no interest rate rollover, nor does the dollar, but at least it's a positive swap in that sense. From the levels that Gary has on that chart, you go back to 2015. Yes, it was the Swiss National Bank low and that flash crash and all this other nonsense that happened, but that structure is still holding very tight around 87.50 to 8800. So if we end up having kind of a fake out breach around 9,000 now, maybe that's where we start creating that intermediate bottom. We start going back up into the range. I think there's room easily to 93.50 to the upside, all the way back to 9,600. Ideally, if I just had no care in the world about how long I hold this trade, I would hold this all the way back up to 1.00. We have major highs at 1.02, major lows around current price at 9,000. But I think parity is always a big level for this one. And I mean, heck, we're down 900 pips off of parity. If I hold it and get back to parity at 1.00, I will just accumulate, small positions and just make a massive chunk of profit once we get it again.
Yep.
Absolutely. Well, I'm going to just add to that, Chris, and say I like it. I like your views on this. I probably won't do anything until the market gets above 91.88, so we can begin get into that range. But that doesn't leave any sort of option, because I am speaking about dollar strength in my trading rooms. I know you guys are talking about it in your trading rooms. So dollar index strength, giving dollar strength. There may be a nice strategy to be able to trade this, and that is using a level in strategy. Start adding in something right here and start saying, hey man, this is my line in the sand right here. If it gets below there, I'm start cutting my losses. But what's going to happen is if price does move down south, we're going to see price come back up and retest that and then break back down south again. So adding into this right here, given a chance to come back to retest this and then see if price goes back above 91.88, then you can go ahead and make a decision and say, hey, let's see, I'm going to close out, take my profit, get the heck out of Dodge, and then allow the market to go down and start selling down in it's more of a trend-based system. But right now would be the strategy to be used would be a leveling in strategy. So I'd add in a little bit as the market's starting to move back up. And the reason why you want to do that is because if the market does break above that level of resistance here, so let's go ahead and pull it back up here. So if the market does go ahead and let's say you're leveling in here and price goes ahead and moves up above this, then you're riding a free ride right here with money in these trades in the profit, and you're not going to see your trades retest those entry points again as you go ahead and move up your stop losses to the bottom of the range. And just allow it to move up to that level you spoke about, Chris, there at 1.0. Yeah. So it is definitely going to, if it gets back above 91.88, there's a lot of profit to the upside. And this is going to be one of those trades that I'll be looking at it. And I think, guys, I think we both all agree, right? I think we all agree that patience is critical right here, right? Patience is essential. You have to be patient and watch these setups. Even though these setups might take a couple of weeks, maybe a month to go ahead and actually start materializing, we have to be patient enough to be able to check out and watch these setups, monitor it, and then when the market moves in these levels, and then start paying attention to start taking profit from those moves. Because if you're patient enough, it's going to be a very profitable trading opportunity. So just be patient about that. But I like that trade, Chris.
Yep. And so I think that'll transition well to, if we want to talk euro dollar as a group. I'm pretty sure we're looking at the opposite of that. Like, we're looking for a bit of a topping pattern on euro dollar.
Yes.
I think 120 is a great resistance point, and I'm looking for that one to fall as well.
Yep.
So
Yeah,
Okay.
I'm just looking just a real quick. Gary, Chris, I'd like your opinion on this. I'm selling. I'm already in a position. I loved the price action we got on Friday. And my target is down to 13.25. I think we could I actually think we could see sub 110. I think we could go to 108. But 113.25 is kind of my medium term target. And I think we can get there fairly quick because we are so overbought. There's going to be potentially a lot of, you got to remember, whoever wanted to sell the dollar has already sold the dollar. Whoever wanted to buy the euros has likely bought the euros. And so when we start to see sell-offs, there's going to be potentially, a short squeeze that happens because there's a lot of people who sold the dollar, and they're going to be kind of getting out of their trades to lock in some of those profits. And so we could see this move happen pretty quick. But 13.25 is where I'm looking for on the downside.
Okay,
like it.
Good.
Yep. I said 1,400 just to be conservative. Yeah, right there with you.
So I'm going to jump into, while we got the charts open right here, I'm going to jump into two pairs right here, Euro JPY. Euro JPY at the moment right now, I am feeding this wolf every day. Okay, and so we've been trading this, and if you look at the overall directional bias right here, I notice that we have a wave structure in place. You can see right here, we have a wave 1, 2, 3, and now we're trading in wave 4. Price is traded above this level of resistance. So I'm already starting to, and I have already done it last week and the week before that, started adding in, just like I spoke to you about the US dollar Swiss. So I've gone ahead and started leveling in here, so I can add some positions in here. I've got about almost 4 standard lots already short on Euro JPY. I'm in the money already. I showed a lot of profit as the price came back to this level right here, but I'm expecting price to break that 124.40 level. Now, I will protect the position if it doesn't start breaking soon, because I don't want to be holding on to this trade for too long and start paying interest on this trade. But I want to go ahead and look for the 124.40 break. If I can get the 124.40 break, I'm expecting price to move down to about 116, and a break of 116 will complete my fifth wave cycle. That's going to be down here at about 111. So I'm already a seller on Euro JPY looking for that 124.40 level. If it breaks, man, that's going to be good money, and it's going to be easy money to the downside. I like the Euro JPY as a sell opportunity. My next trade is going to be on Euro, let me see, no, sorry, Pound Aussie.
Before you move on to that one, you think about this. Yes. I said I was bearish on the euro dollar, and I was bearish on the dollar yen, which makes me uber bearish on the euro yen.
Okay. Well, good. To
get people's heads spinning.
Yeah, exactly. All right. So pound Aussie. Pound Aussie, we've got this channel. Now, don't get me wrong. I'm not oblivious to the fact that we've got this big downward AB move, and then coming off the side right here. So we've got this big downward AB move. We're in this bearish flag at the moment right now. So we're in a bearish flag, so which means that the market could go do something like this and then break this flag, and then off it's going to the races towards the D of the ABCD move from this right here. So if this is the A, that's the B right here, and this is the C retracement. We're heading towards the D extension a lot further down on Pound Aussie. Now, I'm looking at this as a short-term opportunity. So I'm looking to buy on the Pound Aussie. I'm actually already leveled in quite a bit right here, but I know that the market's gone range bound. I've got this little indicator right here that even indicates that right here. We're range bound. We're in contraction phase right now. And to be honest with you, the smart move for me would be as price goes up to the top, you take my profit. We spoke about this last week. I don't know if you guys remember. And we spoke about buying right here based on this contraction phase. We said, hey guys, let's start buying right here. We want to buy here, and we want to profit as the price comes back up to this level right here, which it did. So for those that paid attention to last week's session, they are profiting and taking good money from that rally to the upside, especially on these short-term trading opportunities. And we spoke about a gear down trading approach in order to be able to take the full advantage of that upside move, because you don't want to trade on a 1 hour or 2 hour chart and then end up getting in the middle of the range and risking too much than what you can gain. So that was taking place right here. So I'm in for the long haul. I'm not looking for the short-term move. So I've bought in and I'm still chasing after a higher profit to the upside. I was considering to take some profit as I got to the top there, but I thought let me just let it go because my outlook would be much, much higher up. So I'm looking at this right here and I'm saying to myself, I'm expecting price to go ahead and work his way up towards the top of the move, which is something like this. I'm expecting price to move up here to around about the 1.618. So I'm looking for a breakout of this, and the breakout is going to go about 434 pips to the upside. Now, clearly we can see a bearish movement right here. Pound has gone ahead and moved south. We've seen a weak pound, weak Aussie, but yet the pound Aussie's moved south because we've got a weaker pound. Now the deal is this, okay? I'm going to continue to hold short. Now I did profit some of my profit a couple of weeks ago on the pound Aussie, and the reason why I did that is because I was over here when I was buying in, and the profit that I made over here, I closed out. I left some on the table to continue this ride. But if price goes ahead and gives me a little pop out right here, I'm going to go ahead and buy back in again. The reason why I'm going to buy back in again is because we're in this channel line, right? The channel is saying bullish, but this is going to be what we call an expansion move. So the price is going to move down below this box right here, give us a false break to the downside, and then work our way back up again as price goes back up to this level. So we're going to be able to capture a lot more profit to the upside by adding in below this level right here. So anything below this box right here, this contraction box, I'm looking to buy in on this so I can go ahead and continue to see the rally to the upside. All right, that's my.
I love this trade. I love this trade, and I think you got a really big gift on Friday. That's kind of a covert gift that a lot of traders might miss. We put in a slightly higher high. That's a big deal. I mean, that was a proof of bull saying, you know, we're going to give you some bears, but guess what? We're still ultimately in control of this. Trend analysis 101, higher highs, higher lows. It's still intact.
Yep. And look, I understand we've got this range, so I'm not paying attention to any sort of indicators at the moment right now. If you look at any sort of indicators at the moment right now that are identifying trend, you'll probably see range-bound conditions. But what we can pay attention to is any sort of divergence that is at those levels of support. So as price moves down to those levels of support, I may go ahead and start paying attention to, and I just see my camera's gone dark on me, but I'm going to start paying attention to the support level of this chart. Well, let me go ahead and show you right here. So as we go to this level right there, I'm going to be paying attention to this support level right down here. So as price comes back down here and trades below it, and I look at the 4 hour, maybe the 1 hour, and I see that we're getting a good level of divergence here, bullish divergence, I'm going to go ahead and start looking to jump back in this. Now, I like the fact that even though we've got this this indecision, notice that we also got a missed target, a monthly missed target up here at the top at 188. And that lines up perfectly with my target right here at 188.45 right here at the top with that the extension. So there's a lot of upside potential that's going to get me excited about a dip below this contraction box to start looking to buy in on this and chase after the 188 level as we go. Now again, I think what's important to remember right here, sorry, it looks like my camera's gone all messed up right here. Let me see if I can do a refresh on that. And let's see if that'll work now. But what I want to do here, there we go, better. What I want to do on that particular trade is, once again, patience, right? Patience and strategizing yourself inside the environment and looking at the perfect place to go ahead and trade. There is no holy grail trade. There is no perfect place to trade. But we can definitely narrow it down to where we're anticipating price to turn and start working ourselves into that trade. So by the time it does break out, we haven't over-invested into it, but we have invested some so that we can add to the position and start making more profits.
Can I ask a quick yes/no question to both of you guys? Just
Yes.
rapid fire. Okay. Here's the trades so far. I think we've kind of wrapped it up. Euro dollar short. Yay for me.
Yay.
Chris. Gary.
Yay.
What else did I say? Dollar CAD long. Yay for me.
Yay.
Yeah.
Euro yen short. Yay for me.
Yes.
Meh.
Okay.
Not in it.
Pound Aussie long. Yay for me.
Yes.
Yay.
Short term dip, then long. Yes.
Aussie dollar short for me. Yay for me.
Yay.
Yeah.
And then dollar Swiss long. Yay for me. I
Yay
love
for
them
me.
all.
Yep.
Yes. Absolutely. I think
we're
they're all
on
good
the
setups.
same
I think
page. I love
patience. Yep, I think they're all good setups. I think patience is important and making sure that the timing is right. So the question here is to the students and everyone watching this right now. If you're unsure of exactly when that timing is going to be the right timing to start leveling in, buying in, whatever it is, or do what Tyson does, put your stops wherever it needs to be. If you're unsure how to be able to get involved in a trade like this, that the opportunity is huge and you want to be involved and you want to be notified when this takes place, absolutely make sure that you get involved in the trading rooms. Tyson, Chris, myself have got trading rooms. We talk about these moves. We're focusing on this. We also focus on the strategies that we're going to be using at the time these things set up. So make absolutely certain that you guys have access to the trading rooms and get involved. Chris, I'm going to go ahead and give to you the final words before we close up.
Final word. So we've been talking about this the last couple of weeks. August is a transition month. Tops, bottoms, breakouts. I just posted stuff on my social media, my weekly outlook and whatnot, and that's exactly what I'm looking for. I'm not interested in saying I know exactly where that stop loss needs to be. I know exactly. Look, if you want to sell the highs right now or buy the lows right now, trade small, trade the area. I think the probability is extremely high that we're going to get these tops to form, bottoms to form. This is going to be one of those tricky weeks where the market might spike up once or twice more. And look at what price has done the last couple of weeks, right? It's like up, down, up, down. You can't really trade that. This is choppy. The market's not really going very fast.
Yeah.
So we're looking at tops and bottoms. We're looking at breakouts. If you have boxes on your charts, just like Jerry, what's up, Jerry? Gary's been showing the last couple of weeks. As Gary's been showing in his charts, like those breakouts are super clean levels to pay attention to because look, when they break out of those boxes, it's going to go somewhere else. So look left, find a high. Look left, find a low. Market, the price is going to go somewhere. So that's where the patience comes in. Trade the current environment. When you see price telling you and confirming somewhere else, trade it, right? That's how you navigate those different conditions.
Absolutely. All right, good, fantastic. Tyson, you wanted to say a few words?
Yeah, just two points: patience and discipline. And then think about this in terms of the U.S. dollar and the U.S. economy. Wealth is created by buying high quality at unpopular times. It's very simple.
Yeah.
That's it. Perfect. Absolutely. And I concur with everything that both Chris and Tyson has said. I'm just going to add just a final word to that and say trading rooms is what's going to help you identify the right opportunity and the right trading system for that environment. Make sure you guys connect with the instructors and the trading rooms because you absolutely want to be part of this because we've had some really tight moving markets over the last couple of months and the time is almost there where we need to start looking at great trade and opportunities that are going to be breaking out for plenty of pips. You don't want to be behind the eight ball on this one. So get involved in the trading rooms, traders. Once again, thank you very much for joining us this afternoon. Don't forget to go ahead and like, subscribe, and comment on the video. Also, make sure that you share the video with others so that they can get to know exactly what we do here in these AAA sessions. With that being said, traders, we want to go ahead and thank you for coming in and have a fantastic week of trading. We'll check you out next week as we go back again on Monday and talk about more setups that are taking place for that week of trading. So make sure that you guys get involved. We'll see you then in the trading rooms. From Chris, Tyson, and myself, happy trading.